Testing, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. In sooth, why I am so sad. All right, good. Well, good morning. How are you today? Comment allez-vous? Well, today is a Wednesday. It's the 20th of May, 2015. This is your daily Forex trading strategy session. My name is Vine, or you can call me Wine. Some people call me Wayne. Chief FX Market Strategist for TradersWay.com. Thank you for being a client. We're an ECN. Offering you Forex, energies, metals, indices, binary options, so much more. Love and respect. Included for free compliments of the firm. Lots going on. Oh, I'm doing fine. Thank you very much. Appreciate that. When these sessions are over, I upload them to youtube.com/c/tradersway. Hope you take advantage of that archive of knowledge. I'd like to take this opportunity to remind you that trading and investing is risky and not appropriate for everyone. Your past performance, good or bad, does not predict future results. Always stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So the trading's been good. What have you been doing? Did you sell this retracement? Let's do some basic technical analysis. What have I taught you to do all these years? You get a new low, right? Well, let's say drop retracement. You could sell off the 21. It's a dynamic level of resistance. Okay. Makes a new low. Therefore, as soon as you do that, you take this and you bring it across for your future short. Came up, you might have shorted here, and then it failed. Well, sort of. Why? Well, it was the end of the trading day. Nomad's land. End of the line. Okay? So what's the next prime time to trade? Well, either Shanghai Open or London Open. Pretty easy stuff, right? But that short zone is still there. Okay? And then what? The London boys came in. Not that complicated, is it? Okay, so then you take the previous load of that, bring it across, and it's now your new sell zone. Price kicks off the daily support line. Comes up to the roll reversal. Notice it's not the psych level, it's the roll reversal area in which you sell it again. Expecting a new low. And the reason you expect a new low is we're in a series of lower highs and lower lows. Therefore, there's no support, there's only resistance in which you sell if you're a bear. That will continue until that stops. If it does make a lower low, we'll drag this area over here, we'll bring it across, and that'll be our new sell zone. And this trend trading. Nice, huh? So you trend trade. Currently, the dollar is moderately strong. Aussie dollar very weak. CAD moderately strong. Kiwi quite weak. Yen moderately strong. Swissy neutral, like Euro fairly weak, pound fairly strong. So you get yen, which is kind of neutral, or even dollar kind of neutral right now. and you'd want to be long pound dollar and pound yen, actually. How funny is that? Just based over the last few hours of price action, right? Aussie is very weak, so you could be like, you could trade the Aussie pound, the CAD Aussie, no, that's probably not a good one. But at least Aussie dollar is short. So it's a bit of a mixed bag at the moment, as they say in Francais. But maybe later it'll be different. Maybe next year will be better than the last. This oscillator is suggesting we've come a long way and we're running out of steam. Okay, we want to get going, otherwise it's going to do one of these things. We already got some divergence over here. So you want a short, right? That's what's eating at you, right? So what if you thought it was going to go up, but you wanted it to go down? That's where you could use a binary. It's got built-in risk management. Have you ever thought of that? Black golden pearls stolen from the she is raging. Yeah, maybe we'll talk about that later. Okay. What do you think? One more last hurrah to the downside? We got the psych level. You kind of got to pay attention to that, right? Yeah. Yep. An exhaust out. Fernando, you know, binaries are very, very similar to spot Forex trading because to me the analysis is the same. So yeah, the instrument's slightly different, but you're still going to use your MT4. Now, TradersWay allows you to manage your positions on your MT4, which is really cool and helpful. But you're still going to do your trade for MT4. You're still going to make the same analysis. But the binary has built-in risk management, and that's where a lot of traders fail. If their analysis is still fairly good, the risk management is so poor that they end up losing money on good trades, and then they lose money on bad trades too. Yeah, you know, it's not psych level like it's supposed to. But we're on a 1 minute chart here. You notice that? So what was I watching? I was watching the psych level, right here. And if I wanted to sell it, that's all fine and dandy, because right, the psych level, right? 111, 111. Let's come back to 111. I got to sell it at 111. I'm going to miss it. I'm going to miss it. I'm going to miss it. Right? That's what goes on in your brain, right? The only thing is this is going up. So why not just wait? You know what I mean? Why not just wait? It's big. What, the 1 minute's not fast enough for you? I did meet with a group one time in New York City. I didn't know them at the time, but they traded 10-second charts. Each candle was 10 seconds. And I said, "How's it going?" And they're like, "Well, I lost 50 grand." Nice. Good for you. Must feel great. Yeah, well, sure, I go deep into Stokes. Sure. So I'm just waiting, guys. I'm trying to see if we're going to get like a turn somewhere, right? So the 1 minute says, yeah, I can think about it, right? Think about. I can think about it if I want. Then I readjust, take a check at the 5. 5's not really overbought. Well, I can try it if I wanted to. Black golden pearls stolen from the sea. Okay, but you can see now that if I wanted to, in here it'd be a reasonable opportunity. Don't you think? And if I'm going to be wrong, I can't be that wrong because I have the 1 minute on. I'll just take the loss, and I'm only using this. So, you know, I'm not risking that much, right? Now, it's mediocre on the other time frames, but okay. So you could have sold, could have thrown down a put. Now, what blows people away when they first get into options is you're actually buying a put. That's where options get complicated. Are you buying a call or are you buying a put? Well, what if you sell a call, but what if you sell a put? Well, what if you buy a call and sell a call? Or what if you buy a call and sell a put? What if you buy a call on the 12 and sell a call on the 13? See, that gets complicated. Whatever. In this case, if you click call, you're saying Euro USD you'll make money if the Euro USD goes up. If you click make money if the Euro USD goes down. Much easier, right? Strangles and straddles and blah, blah, blah. I very much dislike it. Okay. So you see how this little area here was our little zone? Now what? I'd have my stop close if I were scalping. So you can move it where what did I say, up here? Right? You keep your enemies close and your stops closer. So it's a scalp. So, you know, you'd still lose because you got to cover your spread and stuff. I'd say 2 more red candles and I'd move to BE. Yeah, that's that doesn't feel good. Hey, RPP. You might have been the guy that discussion several days ago about floating losses. Oy vey. It's already wimping out. I don't like it. I don't like it. This dead candle should have been bigger, in my opinion. See, you would think that those that want to sell it below would be selling it, right? We're there. What are they waiting for? So when they went about like this, it adds frustration to the market. It just means nobody knows what they're doing, and maybe that's what happens. Like, I prefer to sell when the okay. So like, let's just this one. It won't be quite right, but let's just mark this, and then I'll drop into a 1 minute and try to catch the 1 minute there. And there it is. So any one of these 1 minutes I could have sold. All right, like this one, this one. So the 5 minute turns first, then you catch the next cycle. That's one way of doing it. Well, the issue is I don't mind building positions. I'm just looking at the chat here. I don't mind building positions. In fact, I've built very large positions of over 100 trades. The secret to success is that they're all profitable, not all losing. So someone shared their trades with me yesterday. They made like 300 pips trading yesterday, which is great. But then I looked at, what he was doing, and I'm like, dude, you got like 20 trades open and they're all losers. So you made a lot of money, but at the cost of risk, and now you got 20 losing trades. Okay, they're not big compared to what you've made today, but they can be, they could be. So you made a lot of money and you'll give it all back tomorrow. So what's the point? Yeah, no, but we're talking about RPP here. He had one that was 330 pips. That's just completely unacceptable. Unless you've adjusted your lot size appropriately. But it seems to me along the way you could have found a better entry. All right, so here we go. The little scalp failed, and I think it has to do with the 5 minute and just not being set up properly. That's why I didn't throw down an example. And it feels like it's trying to head up. I'm going to be a cheeky monkey here. I'm actually going to buy a call. And we'll just see how it goes. So, and if you want to watch it, you can change it from the cash chart to the binary chart. We've got some EA on here. Oh, I see. Yes. I didn't know there was an EA on my binary chart. Hang on. Let me turn it off. Gee whiz. All right. Had a binary. All right. So anyway, so that whatever. I'm just trying to throw down something to watch. I don't really care. All right. Let's do around the world. Yeah. So I just prefer that when you short, you don't short again until the other one, take care of it, like break even, right? Also, this isn't traditionally the time of year that I build positions. This is usually, sort of a great day trading type of scenario. Now, we might have a change of direction, as you know, and as you might feel in the market, but we'll see. But summer, it's not even June yet, right? Early summer, late spring is not typically the time of season for me to be building portfolios, right? I mean, think about it. It's like farmers don't typically harvest unless you're in South America or whatever, right? Canadian farmers are generally not harvesting in May, right? They probably finished planting, and now they're complaining about the government, I guess. So that's what typically happens, right? Yeah, it was an experiment. Sure, just experiment in the right way, right? If you're gonna do it, just do it right. So yeah, I think you can get frustrated building portfolios right now. We just don't have the volume and volatility, and it's going to wane as we go into summer. But at some point, though, RPP, you know, let's say on a demo account, if you're going to experiment, you know, get in a trade you like, that you'd like to be in for 3 months. See if you can be in a trade for 100 calendar days, right? Long it, wait for the stop to move, wait for you to be able to move your stop to break even, so it goes up, and then it comes down, and then it goes up, and if that would be a trend, which means the first one's still profitable, enter in a second one and move that stop to break even when you can. Let it go up, let it come back. Get it in a third. So at break even, and never go any just have a lot of positions open, right? So in here you'll have a lot of positions open, and all the stops will be at break even, and you'll just have floating pips. And then of course, hopefully at some point, you know, you'll earn a carry too if you want to balance it that way. Well, Alex, I prefer to build positions closer to the end of summer in anticipation of traders coming back to the market, and I'm already in at break even. So if I get direction correctly, and the rest of the market as they come back from holidays goes in the direction that I'm already in, then suddenly they're going to carry me, and I'm on 20 trades, let's say, that are all, you know, 100 pips on average profit, and all of a sudden the market comes back, and all of a sudden within 3 weeks, as more and more people come back to trading, suddenly I'm up 500 or 600 pips per trade. Thank you, Fernando. RPP, no. I think I know what you're saying. He says to be successful, a holding while it goes against you. I would clarify that a bit. I would say that you need to have a reasonable stop when you enter. People, when they trade, their stops are just not appropriate, and they move them too quickly, and they break even too, and so on and so forth. Okay, but having 5 or 6 or 7 losing trades, and you're willing to take a small drawdown and you know, to get them into potentially profit, no, actually it's not, and it's going to come out in your pain to gain ratio. It's going to come down into risk performance. Right, you're going to see it in the statistics. And if you do it that way, it's inappropriate. People won't want you to do it with their money. You can do it with your money, but no one's going to want you to do it with their money. So just be careful. Okay, that's all. Just do it slowly, one at a time. What's the big deal? In 5 or 6, 7 days, you could have positions all at break even, all profitable. What's the big deal doing it that way? The starting maximum drawdown would be about 10%, Fernando. Put it this way, if you have a drawdown of 20% or more, you will never work as a professional trader. You're fired. You're fired 10 times over. I mean, you're just dead. It's a scarlet letter. if you are a trader in the United States of America, your trading history must be reported for 5 years, I think it is. So for the next 5 years, you'll have to show somebody that you had a 25% drawdown, and they'll just, a professional would laugh at you. Get the hell out of my office. I mean, so you can't do that. And what happens is amateur traders hit those marks fairly easy because they're extremely over leveraged. And you'll say really silly things to me like, Wayne, I made 10%, my account is up 10% yesterday. Yesterday? Well, okay, well, good for you. A professional would never want to see that, and an investor would never want to see that. Yeah, over leveraged, underfunded, yeah, and whatever. Yeah, you got to just be careful, right? The average professional Forex trader returns 2.5% a month. A month. That's a good month. A 5% month, 20. Because people are just going to look at it and like, if you adjust for the risk, it's just unacceptable. And you're like, but it's super profitable. Like we don't care about that. So just be careful is all I'm saying. You can disagree with me, which is fine. Be careful. All right. Where's my binary? Oh, it's ending. It's ending. Hang on. Where are we? Where's the Euro USD? Didn't we have it on the oh, this wasn't the one on the binary. Golly. All right, I think I killed that. All right, so there's the binary, and I'm going to make money because it expires in about 1 minute. You see it? I think it expires on this candle. Low. So how many am I up? 8 or 9? 5 or 6, 7? If this candle closes above that line, I'm going to get paid for 25 pips. Oh, I just got paid for 25 pips. 1, 2, you rock! Yay! So that's the best part about scalping with binaries is I was only up 6 or 7 pips, but I got paid for 25. Yeah, boy! So I was saying this yesterday. I found when I stopped with the cash market, what happens is it comes up, then it comes to resistance, and I'm out a little late always, right? And if it doesn't go as far as I thought, I'll get out with 2 or something like that. In this case, I only have to be right on direction, and I'm going to get paid for 25. No, Alex, it's the same as trading a spot. It works out to be like 3 pips, right? So it's no big deal. Now, of course, if you're 1 pip wrong, you're going to pay the 25 pips, right? Yeah. There's times when to do it. So again, the 5 minute with a 1 minute divergence, and so you just trade it back up with the 5 minute, right? So I longed it here, right? And this green candle, I think you remember. And so it was the the 5 minute than the 1 minute, right? So I traded it right off of this, right? Remember how this failed along here? Go. Yeah, well, precise is one thing I am, so that's pretty cool. Now remember, let's go through this. The 1 minute wanted to go up. The 5 minute was indifferent, right? Let's just do it this way. 5 minute was indifferent. 15, okay, was just turning up. Hourly is already going up. So, right? Oops, did that? I want to make sure that updated. I think it did. The 1 hour is already up. The 4 hour wants to go up. And we tested 111 like, I don't know, between times on a smaller time frame. So it's just one of those things, right? I don't remember May 12th. So anyways, so there's that dog and pony show. So let's go over to the British pound. Actually, let's look at this. This is our oldest, right? So how would you feel about doing this now? So what is that? Basically up to 112.50 and then drop it like it's hot? Yeah, I'm sure it's in the YouTube. I just don't know RPP which trade you're talking about, but to me every trade is eventually the same. It's all the same. Remember, your trading should be fairly boring. If it's not boring, then doing something risky. Otherwise, I don't know why you're getting all emotional, right? So anyways, there it is. So maybe go up. Now, does that mean I'm going to buy it? No. Does it mean you could buy it? Definitely. Okay. So that's what I'm thinking at some point. And you could use your alpha any way you want. Trade it back up and then prepare to short. Totally could, right? So one way you could use binaries is that if you're, let's say you're fundamentally bearish, but the market is likely to go up for a day, you know, scalp it long with binaries and then swing it short with cash. Yeah, Fernando says sell the rallies, but if you think we're going to the top of this or the bottom of this old channel, you know, we're thinking that it's going to go up 150 pips, 140 more pips. I wouldn't want to sell too many of those. I mean, look at the 4-hour Stokes. Okay, the 4-hour Stokes suggests that if price wanted to go all the way up to there, we could go all the way back to 113.50 if it wants to. Okay, another way you could play it, you could take this and invent the right lower shoulder that doesn't exist yet. You do that by taking this angle here and connect the bottoms. Hang on. Like, well, that's not quite right. Hang on. Let me readjust. Yeah, that's pretty good. You know, I'm not far off. All the sign, all the names will change the day. Okay, now we're going to that apex. Seems we're wasting away. You see what I mean? Where the faces are so cold. Right? That's on a daily. So like up for 2 days. What is it, Wednesday? Up until Friday? Any thoughts? So just be careful. Well, all right. So Alex says, do I think this current low, blah blah blah? I don't think anything. That's the analysis. Okay, this is what the charts are telling me. The 4-hour wants to go up. The hour is already going up with divergence. What do those two things tell you? We have hourly stochastic divergence, and 4-hour is 97.7% oversold, and we're at obvious support. What does that tell you? You have no opinions now. Just what does the technical analysis tell you? More likely for a while than down. Great. Next. My opinion is irrelevant. Because remember, I base my opinions on fundamentals, but I trade technicals. Okay? So like this was an easy long, because we talked about it. We're at support. We set all that up. We're long. First target's in here. Now, you know, we might want to consider this a break. And what was the plan then? If you consider that a break, now you want to get ready and go up here, right? Now the funny thing is, we talked this a week ago, seven days ago, about what, the 14th or 15th? Here it is, the 20th, right? So a week ago, and now we're already up here. But this is what we were talking about back then. If it had dropped here, right? If it comes up and breaks, then we're looking for the retracement back to the roll reversal, and we're going to go up to the next one. Now, the cool thing is, that's what we talked about 7 days ago. You already know what we're doing now, right? I mean, that's why Forex should be boring if you're just carrying out the analysis. So we knew that would come up here. That was the trade plan. Now, we knew. What happens if we were wrong and it fell down? Well, your stop would get hit, and it was some stupid person in the market, right? It wasn't your fault. Some idiot sold this. Oh, well. All right, so heads up to resistance. Great. So two choices, right? It's either going to fall and go back to the bottom of the range, or it's going to break. We have trade plans ready for both of them. Easy. Right? Boring, dare I say. So now your decision is to decide whether you believe that's a break or not. And if you think it's a break, then if I were me, I would be preparing for a shot like this. And wouldn't it be nice if you got something like this? Okay? And you use this not as resistance, but as support. Because right now it's resistance, correct? So what if price comes into our red zone, which is our new green zone actually, then makes a very significant high, maybe off of news or something. Retraces, now this area is a support. The oscillator's gone like this now, and boom, you're long and gone. Your stop's just below this, right? So your stop's in here now. And why are you so confident? Because you planned this 7 days ago. You figured it would probably happen. But now you actually did it. Next target now is up here. So now you wait. Okay? Hurry up and wait is the motto in Forex. If you're not waiting, it's because you don't have a plan and you're reacting. Think about it that way. If you're not waiting for something to happen, then what is your plan? My plan is to wait for something to move and then I'll throw a trade. Hope that feels good. Hope you can sleep at night with that. Probably not. Right? And your two brothers, Sloppy Joe and Self-Sabotage Stan. The complete trading team, right? Gut reaction Rick, Sloppy Stan, and Self-Sabotage, whoever it was. But anyways, and then don't forget to always back out, right? Back out, remind yourself how lovely this has been. We traded this whole range, and then it broke, and then we did this lower low, and then we identified this range, and now maybe it's coming back to here, and then it'll come back down to there, and then it'll go up to here. Louflet, tell your mom. Dead broke Darren. Leveraged Lucy. All right. Here's the S&P 500. And we talked this one up big time. And it started here. Then it made the high. Then it came down. It came down a little lower than I wanted, but you can see the channel is based off of that. And I think what I said is it just had to go up. And if it did break below this, it's a long way down. Nobody's going to make money. It's and I didn't even want to think about it, because it would have made for some horrible summer. But do you guys remember the question that nobody or very few people make money when the stock market goes down? And at some point, a lot of these pullbacks have to do with rebalancing. I want to make sure the lessons kick in, guys, right? So, for example, I think it's a different one. But anyways, there's these opportunities where if you're a portfolio manager, at some point, your winners get too big and your losers get too big, and you need to rebalance. Because you've actually told your traders, for example, or your investors, you say, we will never hold more than 3% of any one position, right? Otherwise, it's all risk, no diversification. What do wealth managers and portfolio managers generally pitch to their investors? Oh, we're long-term conservative investors, and we reduce your risk by offering you diversification, blah, 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 right? Keywords, right? Lower risk, diversification. Those are all the bullet pointed ones, right? Yeah, he's got it. Ken's got it. So every so often what happens is your winners, they grow dollar-wise, dollar adjusted basis. You're holding too much of Apple because it's up 10%. So you got to get out of some of that. And what happens is those stocks come down. And some of your losers are too big and you want to dump those too. You go to cash, the stock market comes down, but someone else comes in and says, hey, did you see Apple stocks down? And you buy it back up. That's generally how the stock market works. And it's not a typical situation where you see the entire stock market down 30%. Something is not working in the economy for that, right? So when you see the stock market down 5%, you probably should be a buyer. And the vast majority of market participants make money, and I mean the vast majority, make money when the market goes up. So generally, you want to see it go up. And you're identifying pullbacks and levels of support which to buy. Lower than this one was scary because it was a long ways down, and you have to ask yourself, what happens if the S&P 500 does this? Well, a lot of things are not working in the economy, right? You see what I mean? Now, the question for you, if you want to do some homework, how does that affect the U.S.? Is there a possibility that the Euro USD is falling now? Let's do this, Euro USD. Is it possible? I want you to think about it, and you can do your own research, do what you may. It's your alpha, not mine. Is it possible the Euro USD has been going down now, potentially because the stock market has made higher highs? Is there possibly a relationship? And if so, if there's a relationship, because again, I think this stuff's easy. I mean, then you could use the stock market to help you predict the Euro USD moves. In a very similar fashion, I believe if I made it clear to you, it'd do the exact same thing on DAX, and that if this reversed here, because this stuff hadn't happened yet, that the Euro USD, and if it did hold much farther down, and the Euro USD was just going to have to wait probably the rest of the summer. How many people agree with the statement that that conversation happened in detail? Anybody? In detail, that suddenly you're watching the DAX for the direction of the euro. And maybe to remind those that maybe don't remember, we talked about what happened during this period, Euro USD. When the DAX was going up since the beginning of January, okay, that's what we're looking at. From the beginning of 2015, What direction did the Euro USD go? Come on, guys. I'd like to see 50 people answer, not 5. What's wrong with you, boy? What direction did Euro USD go from January and February and March and April? Okay? And then starting April 1st, what happened to Euro USD now? Well, we were at 104 now, and we went from 1015. It was 1,100 pips up. So now we're at a 3A2 Fibonacci retracement. If it bounced here, what would happen to the Euro USD? That was the conversation last week. It's only last week, guys. All right, so I mean, maybe, just maybe, there's a relationship between these markets. Now, the relationship can and will change, but this is called your alpha. What is your ability to outthink the market? To be smarter than the market. Efficient market hypothesis says you can't beat the market unless you add more risk. I'm just trying to say that you can think ahead and plan ahead. Okay? What do you think, guys? Food for thought? Did anybody have an aha moment? I love to hear all that. Did anyone say, wow, this is starting to make sense? Yeah? Not even a little aha moment? Yeah, well, Nikkei is obviously going to be related to the yen. The DAX is obviously going to be related to the euro. The S&P 500 is obviously going to be related to the dollar. Yeah, DeBeesta says makes sense out of chaos, and that's what chaos theory is, right? I actually did a video on chaos theory and fractal geometry. So, cool. That was old school. I did that 6 years ago, I think. FTSE to the pound, right? Yeah. Yeah, Anthony said, like, you got the aha moment the last time. So I hope now you got pips this time, Anthony. Yeah. Cool. I got a request for oil. It's so funny, right? We do the same thing every day. All right. 6 months ago, I thought it would go up into this gray zone, and then it would fall. I still think that. Now, where's my sell oil here? We've had that there for so long. Where did it go? OMG. You know it's there. So anyways, yeah, 6 months ago, I said price would come up here, and it would then fall. Well, ask yourself, is it falling? So that one we did in December. Shocking, isn't it? That was our plan in here. All right. Well, sideways is the new not up, Demeter. Or another way of looking at it is, if you look at our flash crash for oil, This is the 382 Fibonacci retracement. Am I expecting this to go to 20? No, absolutely not. But that's high enough for now. Okay. And, you know, if anything, it'll do this. Okay. And what's the real reason for $50 oil? Fracking. And fracking is a technological revolution. So this has nothing to do with a lack of demand. It used to be a supply issue, that there wasn't or in fact, oversupply created from lack of demand. So I guess a demand issue where there wasn't demand because global economics was slow, so oil came down, fine. Now, $50 oil is based on a technological revolution which will not go away. And the technological revolution is if prices of oil go up, let's say to $75 a barrel, you can go out into a farmer's field and drill, or in this case, frack some oil, the oil fracking facility, and it drills down, right? And you can start pulling oil out of the ground in 30 days. In 30 days, that oil is being sold on the market for $75 a barrel, and then this increase of supply is going to drag prices back down to the $50. Okay? It used to be when oil went to 75, some guy in Saudi Arabia would build his facility, but it was much bigger. It cost much more money, and it took 2 years, guys. 2 years. So then there was demand, and then more demand, so then it would go to 85, and then it would go 95, and then it would go to 105, and then it would go to 115, and finally 2 years later the oil showed up. And now it's almost on demand. You want more oil? Not a problem. It's like you own a website. You want more traffic? Just give Google more money. You'll have it today. Just add more money. More people will show up. Okay, you want more oil? Not a problem. We'll frack it for you. Okay? Yeah, Debisa says, why did I take it as high as it is? It's a 382 Fibonacci retracement. And it's not me. It's somewhere between 63 and 65, I think it was. And it came up to 62 and a half. So I was off by fifths. I'm sorry. I'm sorry. Must have been tired. Why? I mean, why you took your 100% one? Oh, off the, we were guessing at that point for a future low. Let's go back to that. Okay. So it was based off this, really. Okay. Okay. Then there was another potential short here. Okay, then that failed, as you can see here. So now what do? Now you're range bound. And you can see we already dragged it all the way across. And then you can see why we drew this. Breakout, pullback, gone into the 382, retracement, lower high, lower low. So set up in January, confirmed in March, and here we are almost June, and we're just kind of getting this thing set up over here. Okay. Yeah, was anybody long Euro USD when I grabbed the charts this morning? So I gave multiple reasons why Euro USD would go up, and now we're long and strong. Cool. Hallelujah. Look at, this is where I longed it, guys. On the 1 minute chart. Can I get a high five? Can I get a hallelujah? Hallelujah. Brent, I'll have to just look at it next week. It's not data that I produce. It's licensed data, so if they don't update it, then I can't do about it. So anyways, good. Okay, nice. Somebody wanted the beast. So let's go to the beast. Where's my Widowmaker? There she is. Here's the Widowmaker. Okay. That's the binary. You know, I want to show this somewhere else. I think we already did this like yesterday for probably here. Yeah, all right. There's our plan for today. Okay, tell me how we did. Well, Eric, I couldn't possibly know your target if I don't know what your strategy is. So that's for you to decide. What do you think, guys? That's what we did yesterday. Yeah? So I haven't updated my analysis since yesterday. It seems valid to me still. So whoever asked for the beast, well, that's what we did yesterday. So long at 86, price is currently 87.75, so it's up 200 pips since yesterday. You're welcome. I'm still waiting for those Cuban cigars, guys. Just email me, wayne@fxbootcamp.com. Tell me you're going to send me that Cohiba Bay hike. Yeah. So that's that, and I have my doubts here. I'm not fully in the Kool-Aid that we're full on risk on yet, but a higher high would produce that for me. Now, why did I say up and then down? Remember, I don't have an opinion, right? You know, actually, Glenn, I was at a party one time, smoking a cigar, as I very often do, and just a bunch of my neighbors, a bunch of dudes, you know, a bunch of dads standing around, and I'm smoking a cigar, and we're shooting the breeze, and I don't know half the guys. Anyway, so smoking away, and he's like, "Oh, what do you got?" And I'm like, "Oh, you know, I got a nice Monte Cristo #2." And he's like, "The Cubans?" And I'm like, "Yeah, totally." And so he doesn't say anything, which is kind of an a-hole kind of thing. But But anyways, he goes over to another conversation later, and one of my other buddies that actually knew me, he came up and he says, you know, he works for ATF at the big airport here in Atlanta, and he's the guy that would be confiscating Cuban cigars if you had them in your suitcase. And he says, he doesn't matter, you know, catch you. But yeah, no joke. Yeah, well, maybe. So it's pretty funny. So I could have been busted right there for and I say, I ain't going out like no punk bitch. All right. So anyways, the answer to the question, why did I suggest it was going down? Remember, it's not my opinion. Our guess was that this 55 would be moving up. Remember, it would have been down here at the time. And that they would meet here at this role reversal. And if the 55's in control, it suggests a double. Gets us to the cluster of reversal pivots at monthly and weekly pivot cluster. Therefore, it would come up to there, and then it wouldn't have the energy, and then it would come down. That's all. Now, if it makes a higher high, then I will adjust my expectations. And what will probably happen, if it does go up, it'd be unusual in this case, but it could, especially if there was a change in market conditions or new information, right, was added to make this more bullish than it normally was, well, more bullish now than it was down here. Then what it would do is it would come up, make a higher high, and then to the future 21. The 21 would be here, and then it would long off that 21. Yeah, okay. But right now, none of that's happened. 55's in control, so let's simplify our lives. Stop having opinions. Just the facts, ma'am. The fact is, 55's in control. It's not going to make a higher high, therefore it's going to go up to the pivot cluster, and then it's going to, bare minimum, stay in the range. Aggressive target, bottom of, okay? Pretty simple, right? Aaron wants to know if at 2 p.m., well, what's the scenario for the pound yen? I have no idea. First of all, I don't know what's in the meeting minutes, right? Fernando says, "What happened to David, Kurt, and Rob?" David still trades, and he's in some I think buying distressed wineries in Napa. Hey, you got to have a hobby, right? Kurt is like the chief data scientist for a high tech company. Rob went and started a Forex trading, I don't know, auto trading system that. From what I've heard, failed, but I don't know what he's up now. Super smart guy. I'm sure success will follow him. Yeah, all good guys. What time is it? 8:41. I probably have run out of time here, so why don't we say this? Peace on earth. May the pips be with you. May your profits be above average. Remember, don't get caught in the amateur trap, and that's, you know, just throwing down a bunch of trades and making a lot of pips on a day like yesterday, and then throwing them all away today. Ask yourself, are you, you know, do you have what it takes to be a professional trader? Are you patient? Are you disciplined? Are you skilled? Do you have trade plans? Are you actually doing analysis or guessing? And then act accordingly, guys. Because sometimes the market giveth, sometimes the market taketh away. If you made a lot of pips yesterday, because the market moved, so what? I want you to remember the 3-second rule I shared with you, right? Think about the logic of that yesterday, guys. The market moved like 250 pips in a very short amount of time. And I said, you got 3 seconds to, what was it, jump and cheer and scream and ring a bell, and then sit down, shut up, and get ready for the next trade. And the same thing with the loss. Cry me a river. And sit down, shut up, and get ready for the next trade. And so if you just got all excited and threw down 15 more trades yesterday afternoon, you're probably not so happy. And then if you just blindly did today what worked yesterday, you probably lost a bunch of money too. Well, what happened to your analysis? So I look at the charts, and in about 5 seconds, I think the Euro USD is going to go up based on the analysis. Now, we all want it to go down, but nothing on the chart said that, so we went long and made what's the big deal? Right? Remember, hope's not a strategy. Do your analysis, do the work, and if you're not waiting, it's probably because you don't have a plan. And I want you to succeed. TradersWay wants you to succeed. I hope you know that. So take care, guys. I'll see you tomorrow and the next day, and so on and so forth. Cheers. Thanks for being on my team.